Tesla is a name everyone knows today. Whether or not they know the man that made the name famous is another question. Like its namesake, Tesla has been on the cutting edge of technology since its inception way back in 2003. Tesla has started a revolution in the auto industry by bringing the public an electric vehicle they would want to drive. But some experts and analysts see a flaw in the business model of Tesla, suspecting the car company could be on the brink of extinction. Watch this video till the very end to find out why. While you're at it, give us a thumbs up, subscribe, and ring that notification bell. Tesla was founded by Martin Eberhard and Mark Tarpenning in 2003. Elon Musk joined Tesla in 2004 after investing $6.3 million in Tesla stocks during a Series A round of investment. Musk was appointed to the position of chairman of its board of directors. Tesla, originally Tesla Motors, started in 2003 when a group of engineers who had a passion for electric cars wanted to show people that they didn't need to compromise when considering buying one. They strived to develop their range of cars that could be, in the company's words, better, quicker, and more fun to drive than gasoline cars. One of the main motivations for starting Tesla was the recent retirement of the General Motors EV1 program. General Motors ran this program for only 3 years between 1996 and 1999 and produced a limited run of cars. The vehicles were never released for public purchase, but were considered a great success from an engineering point of view. Inspired by this, Tesla Motors founding engineers Martin Eberhard and Mark Tarpenning began the company in July of 2003. They became Tesla's CEO and CFO respectively. The pair bankrolled the startup themselves until the company opened up for a Series A funding from external investors. Musk was already a successful entrepreneur at the time and had made his fortune working for PayPal. He helped lead the Series A funding and invested millions of his capital, becoming the company's chairman. The following year, Lotus signed a contract with Tesla to help design the chassis and bodywork for Tesla's first model, the Roadster. In a 2006 Series B funding round, Google's founders, Sergey Brin and Larry Page, also invested in Tesla. In July that year, the prototype of the Roadster was unveiled to the world. Shortly after, Tesla published its quote-unquote secret plan for the company. Build a sports car, use that money to build an affordable car, use that money to build an even more affordable car. While doing the above, also provide zero-emission electric power generation options. Elon Musk said. The company was well on its way to taking over the automotive industry. Tesla has now become one of the hottest stocks on the stock market and is considered the #1 auto manufacturer on Earth. So what could cause such a juggernaut in an emerging field to fail? There is no question electric vehicles will play a major role in the future of urban transport and commerce. Under the International Energy Agency's Sustainable Development scenario, there could be 230 million vehicles on the road by 2030, compared with just 10 million last year. The question is whether Tesla is a long-term winner, and does it represent an attractive investment? Based on its valuation, the progress being made by its competitors, the firm's lack of real earnings, its lack of long-term strategy, and its poor corporate governance, a lot would argue that it is not. The most apparent cause for not buying Tesla is its absurd valuation. The current $581 billion market cap compared with vehicle revenues of $31 billion in the 12 months to March, or a multiple of 18.7 times. In terms of units, Tesla delivered just 587,000 vehicles over that period, at an average price of just under $53,000. Even considering the full production of the Model 3 sedan and the Model Y compact SUV from Shanghai, which will take several years, annual production will still be less than 1 million units. Meanwhile, the average selling price will be lower due to fewer sales of the more expensive Model S and Model X. If by 2024 Tesla can produce and sell 950,000 vehicles a year at say $50,000 apiece, annual sales could rise to $47.5 billion, which is still less than a tenth of the firm's current market value. If you compare these figures with mainstream manufacturers like Ford, which makes the world's best-selling vehicle, the F-150, and Volkswagen, which is among the biggest investors in electric vehicles, you can see the problem for Tesla. Ford generates annual revenues of $130 billion, and Volkswagen generates annual revenues of £250 billion, yet both are valued at just 0.5 times sales. There is also the overall issue with the car industry as a whole, as in it is hard to be profitable. Bulls of Tesla can at least point to the fact that first quarter profits of over $1 billion were better than expected. On a GAAP basis, net income was $438 million, or 60% less than the touted figure. Moreover, during the quarter, Tesla received $518 million in regulatory credits and booked $101 million of gains from the sale of Bitcoin. So, in fact, the car-making business lost money, which has been the case since the firm joined the stock market. While unit volumes were higher, average selling prices were down by 13% after a hiatus in production of the higher-priced Model S and Model X, and as a greater number of lower-priced cars were sold in China. Supply chain costs were higher, as were research and development costs, which also take their toll on the bottom line. Going forward, average selling prices will likely continue to plummet, meaning the level of credits will be lower, while the company still needs to invest billions in getting its Chinese and German factories to full manufacturing capacity. So there's little prospect of Tesla making a profit from car manufacturing for some time. Tesla has to worry about the competition, as legacy automakers like Ford, Toyota, and Chevy are all dipping their toes in the emerging high-performance EV market. General Motors rolled out an SUV version of its Chevrolet Bolt back in January, priced well below the Model Y, and announced it intends to sell only emission-free cars after 2035. Ford set an even more ambitious EV target for its European sales, saying all of the car models it sells will be EVs by 2030. Apple is also considering partnering with an automaker to get into the car business, according to several news reports. With competition getting stiff, investors are scared and not so willingly throwing their money at Tesla as they have been for the past few years. It is not just in the US and Europe where Tesla has challengers to the EV throne. According to some analysts, China will be the country to lead the world into the future EV market. Louis Navellier, chief investment officer at money management firm Navellier & Associates, wrote this in an email to all of his clients. Quote, "The sad truth of the matter is the EV revolution is now being led by China and Europe, where sales and government EV tax incentives are much stronger. For Tesla to get its mojo back, the company has to get ahead of the EV media cycle that is increasingly being dominated by its competitors announcing exciting new vehicles. While no one knows the future for Tesla, it would be wise to never bet against Elon Musk. That being said, only time will tell what will happen to Tesla in the future." Thanks for checking out the video. We'll see you in the next one. Until next time.